Zebec remains meaningfully below its prior highs, and from a market perspective, that is a visible and measurable reality. However, the point of focus here is not the short-term price condition, but rather the behavioral pattern of the project itself. In the broader digital asset space, it is common to see partnerships announced with little to no follow-through. In many cases, those announcements function primarily as attention mechanisms rather than as indicators of sustained execution. When there is no subsequent progress, updates, or visible continuation, the signal becomes questionable. In Zebec's case, the pattern appears different. When partnerships are announced, there is an observable effort to follow through, accompanied by continued updates and visible engagement. While outcomes still need to be monitored over time, the presence of continuity matters. It suggests that the project is operating with a longer-term execution mindset rather than relying solely on headline-driven exposure. This distinction is important, particularly in a sector where credibility is often diluted by repeated, unsubstantiated announcements. Everything you hear on ZBCN today is for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. A common counterpoint raised is competition. Critics often ask why attention would gravitate towards Zebec when larger, more established projects already exist within the global trade and finance segment. Examples frequently cited include XDC, with a market capitalization around $1 billion, and Stellar, whose market capitalization stands in the multi-billion-dollar range. The assumption is that capital and interest naturally flow toward the largest incumbents. That assumption, however, is not always structurally accurate. Not every participant in this sector is automatically inclined to allocate exclusively toward projects that already command very large market capitalizations. Larger capitalization often implies that a significant portion of potential expansion has already occurred. Using a simple analogy, when the ceiling is already close, the remaining vertical space is more limited. While large projects can still perform during favorable market conditions, their relative expansion potential may be more constrained compared to smaller platforms operating within the same thematic niche. At current levels, ZBCN is approximately 34.5 times below the 10-cent mark. This raises a fundamental question when compared to larger competitors. Is XDC, or is XLM, currently trading at a level that is 34.5 times below any point they could realistically reach during a hypothetical altcoin cycle? With Stellar, for example, holding a market capitalization of approximately $7.4 billion, that level of relative expansion becomes structurally more difficult. This does not invalidate those projects, but it does alter the risk-reward framework when viewed through a market cap lens. ZBCN, by contrast, currently sits in the hundreds of millions in market capitalization rather than the multi-billion-dollar range. For participants specifically seeking exposure to global trade and finance without allocating into already mature valuations, this positioning presents an alternative. This is not an instruction or recommendation, but rather an explanation of how relative scale influences analytical perspective. Another structural component influencing attention is Zebec's connection to the Solana ecosystem. Solana itself is a large and well-established Layer 1 blockchain. Zebec's integration with Solana introduces an additional variable: the possibility that increased attention towards Solana-based, utility-driven projects could indirectly benefit related platforms with smaller market capitalizations. If broader ecosystem activity expands, it would not be unexpected for associated projects to experience correlated interest. While outcomes remain uncertain, the structural relationship itself is noteworthy. Market sentiment dynamics also play a role. Recent price action demonstrated how quickly sentiment can shift. When ZBCN experienced a pullback, sentiment deteriorated at a pace similar to how rapidly it improved during its prior rally. Not long ago, ZBCN moved from approximately $70 million in market capitalization to around $500 million in a relatively short period. The subsequent pullback reversed sentiment just as quickly. This speed of perception change highlights how reactive the market remains. Importantly, that rally occurred without what could reasonably be described as a full altcoin season. From this perspective, the move was not driven by broad speculative momentum across the market. Additionally, Zebec at that time was, in the author's view, less fundamentally developed than it is now. Notably, there was no ISO 2022 compliance narrative attached to the project at that stage. Today, that element is present, and within global trade and finance, compliance alignment is often one of the most heavily scrutinized attributes. Beyond fundamentals, ZBCN has already passed through an important recognition phase. Had it remained below a $100 million market capitalization, it could be argued that it had not yet established its presence within the sector. The combination of the initial rally and subsequent pullback served a different function. It introduced Zebec to a wider audience and positioned it, arguably, among the top contenders in its niche. At present, ZBCN can be viewed as roughly the fifth largest project focused on global trade and finance, a status that likely would not have been achieved without that earlier market cycle. From here, the determining factor may be time rather than immediate price action. A broader altcoin cycle would provide a clearer framework for assessing how ZBCN performs relative to both peers and its own prior moves. Until such conditions emerge, patience becomes the default posture. Waiting is not new in this context. Extended periods of inactivity have already occurred, and additional time does not fundamentally alter that reality. The purpose of this update is not to issue guidance, but to highlight a specific behavioral observation. Zebec appears to be maintaining continuity with its previously announced partnerships, even as public attention has shifted elsewhere. The fact that updates are still being provided despite reduced market focus suggests consistency in execution. That consistency, more than short-term price movement, is the core reason for revisiting the project at this stage. Taken together, Zebec's progress reflects a convergence of infrastructure development, institutional positioning, technical structure, and regulatory momentum. Whether this alignment translates into sustained adoption and long-term value will depend on execution, but the trajectory is increasingly defined by fundamentals rather than narrative alone. If you're getting value from this kind of focused, fundamentals-driven Zebec content, make sure to hit the like button, subscribe to ZBCN today, and turn on notifications so you don't miss future updates. It directly supports the channel and helps this research-driven community grow. Drop your thoughts or questions in the comments. I read them all. Now let's continue with the real analysis.